Hi, friends and professor. This is Shivani Jariwala. Today I'm here to talk about accounts. So first, let me share my screen. Okay, so I have been a commerce student, so I know how accountancy works and all. So let's start to get to know about accountancy. So basically, accounting is a process, is a balance sheet. Like, okay, I'll explain the balance sheet later, but yeah, it is basically a sheet of paper where you record all your entries, like what all you have purchased, what sort of money you have given out, and money or anything it could be. So basically, it is all like stocking up your inventory. If you have even bought a furniture, you got a cash or anything, you basically a business notes down everything on a sheet of paper in a form of a table. It could be used by managers, even students like us can use it, like to like how we note down. Like some people do have this habit of noting down daily expense. So yes, exactly. Those are the records which are called as managing your accounts. So yes, managers, investors, and stakeholders definitely use this so that they can take like appropriate decision based on those accounts. Like what are the expenses of the company and what sort of like even like as companies give salaries. So all those things are noted in a form of records. Accountancy basically has assets, liabilities. Let's talk about the assets. Assets could be the furniture you bought, or your computers, or even like the property. Like if we own a house or a building or a flat, whatsoever it is, that is our asset, that is our property. Now talking about liabilities. Liabilities could be our debts, like car loan, home loan, insurance. All these are called as our liabilities, which definitely we have to pay to someone else. Now talking about equity. So equity is what you have in hand. Basically, after giving out, let's say I took a furniture. So I do have to pay the same amount of the furniture to the company. So the amount, like the asset which is left after paying off, that is your equity. So equity is basically the amount left after paying off your liability. Okay. Now, yes, transactions and financial statements. As I said, the things we note down are our transaction. The like as I said, I took a furniture and I have to pay for the same. So that is a transaction made between both the parties. So transaction financial statements, basically financial for understanding financial statements, let's first get to double entry system. What is double entry system? Every account, as I said, has two things: assets and liabilities. Okay. So assets are your debit. So being a commerce student, my professor gave me this simple funda of understanding debit and credit. Debit is what comes in and credit what goes out. So debit is like I bought the furniture and credit is paying off for that furniture. So my money went out and I bought a furniture. So yes, debit are your assets and credits are your liability. Liable, that you are liable to pay someone for the same thing. And yes, assets is nothing but liabilities plus your equity. Equity is like paying off for the furniture and the furniture. So yes, that furniture is basically my asset now. Um, yes, and definitely for understanding any financial statement, one has to be very clear that there has to be a balance entry to make sure the equality is maintained. It shows you a full and final picture of how your financial table is looking, how are your records looking. Okay, for understanding like majorly the T accounts, what are the T accounts? As I said, the form, like for mentioning all those transactions in a record in a table format is called as a T account. T account, as I said, T account has like, let me show you first. Yes, this is my trial balance account. T account is trial balance account. Uh, yes, and balance is nothing but just records. So as I have shown you over here, this is my T account. So I have, as I said, okay, let's take a fictitious example that ABC, as I belong from a field of marketing, so I love to always put that I own a marketing firm. So yes, so I have this marketing firm called as ABC. It helps businesses reach their target audience by providing correct marketing tool. Okay, so transaction one is that I just bought a new office and I am looking for new furniture. So I ordered a furniture on $1,000 of credit. I haven't paid it yet, so it is on credit. Let's say, how do you say it? Pay cash on delivery. Exactly. So debit is that I got the furniture and I'm liable to pay $1,000. So that is the credit which is going out of my bank account. So I'm account payable. So I'll note it down as account payable. There are many changed languages when it comes to bookkeeping and accounting. So yes, when you pay the money, it's called as account payable. I'm liable to pay to this another XYZ party for the same furniture I bought. Another is that ABC company received cash worth $500 from a customer. So my customer has probably, let's say, asked me to do a week of free marketing for them. Sorry, not free, $500 worth marketing. So the customer has paid me $500. So $500 is like, as I said, debit is what comes in and credit what goes out. So debit is my $500 that I got $500. Okay. So that is like going into my revenue, right? So yes, this is my basic trial balance account. Now, let me show you the report. So this was a ledger. This is called a ledger of like basic accounting. And yes, it has to, trial balance has to make sure that your debit entry is equal to the credit entry. So you have to make that entry. Okay. So this is the report which states that debit always has to be equal to the credit. So you have to make a similar entry for your debit. If debit is coming into your account, you have to make a similar entry for the credit because anything which comes in has to go out. Now, as from the first slide, when I was talking about accounting is about balance sheet, now let's understand what is a balance sheet. Yes, it is a financial statement that shows company's financial position at a specific point in time. It consists of assets, liabilities, and equity, which we already spoke about over here. Yeah, uh, accounting is basically what you call it, assets, liabilities, and equity. So any balance sheet or any trial balance, whatever you make, you have to know that accounting is all about knowing owner's property, what owner is supposed to pay in the market if he or she has to, and finally coming to the equity point. Equity is like knowing what do I have in hand at the end of the day. And yes, balance sheet is changed or things are added every now and then. So balance sheet usually company makes by the end of the year. Like if I'm the owner of the company, balance sheet is given to me whenever I want, definitely, but it is usually made by the end of the year so that all the expenses and everything is like, neat and clean for the owner to see. So yes, from the previous example of the ABC marketing firm, let's know what are assets now. Assets represents what all company owns. Cash, furniture, property, could be anything. Liabilities represent what company owes, what I am liable to pay to someone. Let's say for the furniture, I was liable to pay the cash of $1,000. So that is what account payable is. Now, definitely, as we write in trial balance that company has generated revenue of $500, we don't mention it in the balance sheet. That is the difference between a balance sheet and a trial balance. Okay. The value, yeah. So for the balance sheet, let's understand the value of assets was $1,000, which was purchase on credit, and the cash received was $500. Now, therefore, the equity of the firm, which is like left after paying off all the debt and everything, is $500 in hand. Okay. So yeah, this is how a balance sheet basically looks like. You mentioned the name of the firm and balance sheet, and then it's assets and liabilities and the amounts. So here we have figured out what is the equity. This was the first step of learning accountancy. So the first step is how to know your equity. What do you have at the end of the day or the end of the year, which is very important to know for any firm. So yes, we bought a furniture. That was our asset. We got a cash for the services. So yes, that is $500. Now liability is paying off the debt, the furniture company, because it was bought on credit. So yes, here is this. Here it is. Total liabilities and equity is of $1,500. And equity, which is what we have, is of $500. So yes, to summarize, trial balance is the accuracy of all the records in accounts. What all you bought, what all you have to give, that is trial balance. Whereas balance sheet showcases what a company owns, and the owner's equity. I hope I was clear on this. So yes, always remember, debit is what comes in, credit what goes out. This is the main funda to getting started with accountancy. So yes, here it was, and thank you for watching.